Welcome to Davos in the Desert. My name is David Wanatek. I'm the CEO of Davos in the Desert. We're very pleased to invite you to join us today for our program on specialty beverages. I think we'll learn a lot about coffee and breweries and many other facets of specialty beverages. Let's go right into the program. It's just about time to start. The first session is going to focus on coffee economics. We're going to listen to a primer on coffee economics. Speaking on this subject, we're very pleased to introduce Judith Ganes, president of JGanes Consulting. Judith Ganes brings more than 4 decades of experience analyzing soft commodities, including coffee, with a focus on the market outlook and price risk management. For nearly 2 decades, she worked for the major brokerage houses in commodity research before launching her own global consulting firm to focus on varied projects within the food and beverage industries, as well as the textile sector that she covers. So Judith has a very long and successful background and career, and we could spend a lot more time discussing all of her accomplishments and experiences. But I think for the sake of getting right into the program as quickly as possible, we'll leave it at the abbreviated introduction, and I will turn this session over to Judith Ganes.
Thank you for that nice welcome, and to all those listening in. So I'm going to give a coffee industry overview this morning, and my report is structured in such a way that I'm going to look at the key issues and then show the impact, whether it's by roasters, the supply chain, or by the very part of production, how the growers are impacted by these various elements. Because obviously in times of volatility and crises, everyone in the supply chain feels things a bit differently. And so that is how I structured this presentation. So the first thing, talk about the global coffee market, a brief overview. Then I'm going to go into the key themes, which I label as volatility, sustainability, innovation, and regulation. And then diving a little deeper into some of those critical issues that are shaping the coffee industry today related around those themes. So the first thing to obviously point out is prices. And depending on which side of the aisle you're on, we're in a bit of a crisis here with prices at historically high levels. Now, even though the market has backed off from the all-time highs reached earlier this year, the current market price is still at the highest level it's ever been since the 1970s. And for producers, that is great news, because there's many times you can see where prices are fairly depressed and they struggle to cover their costs and get paid sufficiently for their hard work. But at the same time, there's the negative side to high prices, and there's the stresses that it puts on the supply chain. And sometimes that's forced back down to the producer. And so high prices aren't really the savior for the market. What's really better is fair prices for both consumers and producers. And it's very hard, especially with a tree crop, to have that sweet spot each and every year. And certainly climate is a major part of the price volatility and that equation. So we're at these historic levels, and it comes at a time where there's a lot of logistical issues, other global macroeconomic factors, they're all coming into play. And how is that in total going to shape the future of the coffee industry? So first thing I want to zero in on is we're in a period of political turbulence, maritime risk, all-time highs. We thought there was problems during the pandemic when there was logistical challenges, and think back to the container shortages and how that created a surge in freight pricing. And then we had a situation where we had the Panama Canal, had water shortages. By the way, I'm actually in Panama, a resident here, and I can see the ships lining up for the canal from where I live. And rain sometimes is on the short side, and it does affect the transit through the canal, and that becomes a major bottleneck in operations. But we also have the Red Sea rerouting that can add up to 15 days in transit time and increase freight costs. And so that's been a problem, and the industry's had to grapple with that. And now we also have geopolitical instability, and that also causes increased rates and delivery delays. The problems right now regarding trade wars with China and tariffs, that also is going to create further instability in shipping and basically cause a little bit more of a nightmare than some countries are experiencing already. And so slotting at ports becomes a problem. The delivery times becomes a problem. The industry became very, very accustomed to on-time deliveries, smooth sailing, and not having to worry about that. And so then what becomes the reaction? How does the industry protect itself from a lot of this turbulence that we're experiencing? Importers, how you manage inventory dislocations. Well, importers sometimes front load inventories. That creates some demand surges, and you can see where when there's threats to additional supply, you could have demand accelerated, but that doesn't mean the supply is always going to be available. So you have sometimes mismatches between what's available physically and then also what roasters have in terms of paper coverage, what they've contracted for and versus what they're physically able to achieve. And when there is that mismatch, sometimes there's drawdowns in visible public stocks. You could see European warehouse inventories being depleted at a faster rate or certified stocks against the New York contract. And when you have these disruptions, then it impacts the physical premiums. In coffee, the basis is called differential. So a real simple equation, cash minus futures. And when you have disruptions in one type of coffee or from one origin or another, then it tends to be reflected in the basis because demand for one type of coffee might be driven up from one origin. There was a situation about 15 years ago, very clearly illustrates this point, where Colombia had a massive 2-year shortfall in their crop because of untimely rains. And as a result, there was a lot of physical coffee that was purchased from Colombia, but the crop, there was obviously a shortfall, and the premium, the differential for Colombian coffee soared by $1 per pound. And then roasters start to seek out other alternative origins to fill their needs. And in turn, those origins differentials also surge. And so the market becomes very efficient using these price mechanisms to try and smooth out the flows in the supply chain. But inventory dislocations seem to be occurring at a more frequent basis. Now, you have Arabica and you have Robusta coffee, and the arbitrage, the price spread between the two, can also help to smooth out that flow in terms of demand. So the market watches those indicators very carefully and reacts accordingly. Price inventory dynamics, well, very clear. When you have low inventories, it pushes up spot prices higher. The market becomes inverted or goes into backwardation. And that's the structure the coffee market has been in for over 1.5 years right now. And it shows that there's still this underlying concern about supply tightness, deliverable supplies against the New York contract. At times, that premium is only 2 cents, 1 cent higher, that backwardation. And there have been other times in the past 1.5 years where that spread widened out from one delivery contract month to the next as much as 15 cents. And so there, was a situation where there's some panic, and sometimes that could also lead to hoarding. When there's high prices, of course, that is a great incentive for overplanting. So high prices become the best cure for high prices. But this isn't grains, this isn't corn or wheat or soybeans where you put the seed in the ground and 5 months later you have a crop. There's a really long lead time for that response. And so the market has to grapple with supply distortions for at least 2 or 3 years at a time. When we're looking at the market, that's why in the price chart that I showed, you have these boom bust cycles that, they're common for other commodity markets in general, but for coffee and cocoa in particular, they can be more extreme. So you wind up with oversupply after high prices, and it leads to a glut in supply and ultimately the price collapse. What the market sometimes tells you is, like, right now, the market has stalled at these higher levels, but hasn't continued to scream higher and higher. And so what the market is saying, that if it went much higher, then maybe it would create too much of a future supply glut and put the market at extremely depressed levels in the future, and would also shut demand down too quickly. And so the supply gains have moderated now in the market. Much of the bullish news has been digested already and factored into the current prices. But of course, we are coming up into the Brazilian winter. Brazil's by far the largest coffee producer, and the Arabica crop could be subject to damage the next crop that still hasn't even flowered yet by cold weather in the Brazilian winter. So that's something up and coming, and the weather is going to need to be monitored very closely. The risk of frost in any given year is minimal, but it does happen, and that would then certainly, in a period of very tight supplies like we're experiencing now, set the market off again. When you have inventories build up, that tends to also depress the futures market, and it discourages investment. Right now, we have a period where inventories on a global level are very tight. Inventories for deliverable stocks against New York have been rising, and therefore the market's taking a little bit of a mixed approach here. So that's why when I spoke about the differentials, the price spread, it's not at its widest level. So the panic is over, but there's still some underlying concerns. A market then tries to stabilize through natural attrition and renewed demand. When the market is at depressed levels, we have not come anywhere close to that where we're going to see that just yet. So the market is still in this phase where there's a lot of risk to the upside, but at the same time, much of the panic has actually subsided already. Here you have prices against the global stocks, and you could see that there's challenges here. Supply issues are critical problem right now. So dislocation, if there's any sort of weather challenge, whether it's in Brazil or Vietnam, Colombia, there just isn't the stock on hand, the global stock, to readily meet a supply shortage. In every other time in history, you had much higher stocks relative to demand. And so when there was a supply disruption, there was the goods on hand, maybe not the coffee roasters want, but they need to be flexible, and it helped to smooth out the supply chain fairly quickly. With climate change being more paramount in recent years, we've had 3 out of 4 years where Brazil struggled with their production, 2 years where Vietnam had an issue, Central America has had problems, all related to climate distortions. We've had challenges, and that's drawing down global stocks relative to demand, tightest level in history. So that is why prices are still elevated, and it really won't be until the 26-27 season. Not even, the season runs October, September internationally, and not even the 25-26 season, one that starts in October, is going to really provide sufficient coffee to make the industry feel more relaxed. So we've got potential for some bumps in the road ahead. So roaster challenges in this type of really unprecedented volatility in the market. We've had bull moves before, but the volatility can be extreme because of the very tight stocks and the sensitivity the market's going to have as a result of that. So how do roasters handle that? Well, large roasters have an advantage because the scale that they have and greater financial flexibility compared to medium-sized roasters and players because they don't have the wherewithal to withstand the volatility to the same degree. Rising costs, they feel the cost pressures even more. They have tighter inventory. They need to hold things a little closer to the vest. Remember, coffee prices right now are about 2.5 times the average price. So just to maintain inventory at prior levels, you need that much more cash. So it's very hard for a medium or small size roaster to maintain the inventories that they used to because it's simply a cash drain. Hedging strategies do help in a high volatility market. However, that becomes really challenged when there's tight credit and you can't afford to maintain some of these positions and also at the same time secure the physical supplies that you want. And so decisions have to be made how roaster is going to manage this. So financial constraints are a big consideration in the volatility that we're experiencing right now. And interest rates are certainly a part of that. So some of the responses to this can be operational. So reformulating blends to balance quality and cost. There's an expression that I like to use where a buyer of coffee might say, what is your next best coffee? If you can't afford the best anymore, then or it's not available, then what is your next best quality? You also have strategic inventory management, just in case inventory versus just in time inventories. Slight difference there. You need to be prepared for supply disruptions, which means then you actually need to have slightly more inventory on hand. And again, it becomes more costly to finance it. It becomes harder to maintain it, and it drains cash reserves for those that are financially constrained. You also have forward contracting, where you're buying future crops, you're locking in prices, but that's not really available to all. There's some issues. Do you want to be able to lock in the prices? How are you going to hedge that? What are your operations in handling a lot of the forward contracting that's really necessary? So larger roasters have an upper hand, whereas smaller to medium-sized roasters sometimes don't have the ability to buy out as far and manage their pricing as well as a larger roaster. Also, is there vertical integration to help roaster? And in some cases, yes, in some cases, no. So tighter credit and the impact on the supply chain. When you have tighter credit in the global economy, that working capital certainly impacts farmers, traders, and roasters to various degrees. And the size of the farm, how well capitalized they are, becomes very critical, as it does at the other end of the supply chain for roasters and as well as for importers and exporters. There have been a number of examples in the past year where some exporters did not have the financial wherewithal to manage their positions. They had delays in payments. They had situations where they were promised coffee at lower levels, did not get it. They had already turned and sold that to roasters, put them in a bind, and unfortunately they had to declare bankruptcy. So that is something that does happen when we have tighter credit and problems that are restricting the working capital. And then there's a domino chain effect that impacts the industry. Rising interest rates certainly elevate the cost of borrowing, not only for inventories, but also on the farm for fertilizer, labor, and other operational expenses. Exporters struggle during tighter credit to obtain pre-crop financing to be able to buy as much coffee as they would desire. That reduces liquidity across the supply chain and could cause disruptions in the flow of coffee, which then necessitates that just-in-case inventory practice versus just-in-time inventory that the industry really was able to use for about 2 decades, starting from the mid-1990s. There's a risk of delayed harvesting or under processing. So when prices are high, there's a tendency of wanting to sell and push out the crop, and that could also impact the quality and therefore tighten supply. So tighter credit and hedging constraints. You have higher margin requirements for future contracts. That also discourages hedging. We've seen that in a decline in the open interest, which is the number of contracts outstanding on the against the New York futures contract and also the London Robusta. Smaller traders face cash flow challenges in maintaining hedges. They have increasing exposure, and they're subject to margin calls if they're short hedged and the market is clearly moving higher. So even though they have the physicals on the other side, it's not sold. They don't have the cash in hand, and they need to cover the margin requirements on the futures contract. That's a paper loss because they will have the funds, but if you don't have the money on hand, then you're forced to liquidate your position. So roasters and producers will be forced to reduce their hedge volumes. That increases their market risk because the whole purpose of hedging is to mitigate your price risk exposure. And so by reducing your hedge volumes, that increases your market risk. The higher price leads to increased volatility, less forward coverage, because why lock in substantially high prices when you're concerned that the floor is going to fall out from under the market and you locked in a price of $370 when 6 months from now the price might be $250. And so that also creates problems with liquidity in the futures market. Now, taking a deeper dive, looking at different challenges and some of the responses to the situational issues that I raised. So I want to turn to the food service response in terms of high coffee prices. You have a situation where you have rising green coffee costs. You have transportation costs that potentially could skyrocket if there's the trade war with China heats up and you have dislocation again in containers as we had during the pandemic when China was in lockdown for an extended period of time. There's possibility that history repeats itself there, and that is certainly going to change and challenge the profit margins for cafes. Chains can adopt a tighter portion control policy. They have pre-measured doses and brewing optimization, so less waste, and try and maintain consistent flavor through some smart brewers and training of baristas. Now, want to point out here that as the supply chain looks to manage their costs and they're using portion control doses, brewing optimization, they're wasting less coffee. And so from a farmer perspective, that impacts the number of bags that are sold. So remember, the industry talks about cups served, but farmers are talking about bags sold. And even though consumers might be thinking they're still drinking their 2 or 3 or 5 cups a day that they love and can't do without, because they're wasting less, that actually means demand is going down, and without even recognize it. So less kitchen sink waste. Now, as far as sustaining margins, look at what has happened over the few years. Roasters' margins have gone down. So profitability has declined, selling price went up, input costs surged, but for a while the selling price didn't match the rise in the increase in the input costs. And that's total cost, not just price of coffee, but the transportation, logistics, everything. And so now we've seen for this year where the expectation is that the selling price is going to increase to help to stabilize the margins. You're getting to a point on the margins where if the margins were to decline any further, then you will have many businesses that will have to shut down. It's becoming that tight. Other things that can be done are menu adjustments and your serving models. So some establishments will reduce their refill offerings or charge additional premiums for specialty blends, more so than they are already. You're going to recalibrate portion sizes, replace Arabica with blends of Robusta on a more regular basis. They could restructure loyalty programs. All of these reduce the total amount of usage of coffee and slows demand. Again, even though consumers might think they're drinking the same amount. And that impacts farmers. The stomach share shift to coffee. This is something else that needs to be explored a little further. So global per capita milk and juice consumption is stagnating. It's declining. And I'll show you a graph of that. And coffee is winning out in this fight for stomach shares. So consumers are substituting sugary juices with cold brews or flavored coffee beverages, but have to be very mindful that the consumer is not then associating coffee with the sugar content that they're associating with some of these other drinks, because then that could impact coffee demand and have a backlash on the industry. Coffee consumption is driven by younger demographics, specialty coffee trends, so that's all positive. We have urban lifestyles, prioritize convenience. Coffee capsules and ready-to-drink coffee continues to gain market share. Pre-ready mixes of coffee blended with sugar and milk, 3-in-1s, 5-in-1s, enhance this trend, make it easier for coffee to be sold at more locations. But we just need to be mindful about the sugar component, and with diet drugs, GLP-1 becoming more popular, how is that going to impact coffee as a beverage? Consumer preferences, they're seeking out milk alternatives, and black coffee is seen as the healthier option. Many cafes, most of them already have alternatives, whether it's oat milk or soy milk, to meet that consumer preference as opposed to whole milk or even skim milk. Food service chains promote coffee as a meal accompaniment, and that's displacing orange juice at breakfast. And we're seeing that more and more. You have greater loyalty programs and personalization that also entrench coffee into daily routines. And the industry has been wonderful at that. But again, I raised that red flag about the sugar side, because take a look at this. The juice market, orange juice sales have been plunging. Now, in recent years, that's accelerated because you have had production challenges in Florida and Brazil. And so orange juice consumption has been going down, but demand for other juices has also been slipping. And coffee has been the winner. And you see milk has also been declining, and that's a push away from dairy. But the biggest decline in juice really started about 20 years ago. And that was because of the Atkins and South Beach diets pointing out the sugar content in a glass of orange juice. And it became taboo. And consumers literally just stopped drinking orange juice as much as they were before. Lifestyle changes also have impacted that. And if you're going to a cafe to purchase breakfast and you're adding in 2 beverages, then it becomes an expensive price tag, and consumers are leaning more towards coffee than they are to grab a container of juice. The other thing is continuing to have innovation with novel coffee blends and functional drinks. I travel extensively and I see a lot of this innovation in the different countries that I go to. In Indonesia, for example, avocado is used in coffee smoothies on a regular basis. In Vietnam, so these are 2 coffee producing countries that are very innovative in how they're making coffee beverages. In Hanoi, you have egg coffee, and people flock to egg coffee cafes to try these sort of functional drinks, these blended drinks. These ingredients appeal to the health conscious Gen Z and to millennials, more so than to my generation. You have value added products, and that supports higher margins and diversification. As far as innovation in these niche sales, what we're looking at here, the impact, you also have plant-based infusions, the ready-to-drink coffee. It's gaining traction in Asia and North America. I always say that a lot of the innovation really starts in the Asian market, and then it spreads to North America, and then the Europeans finally say, okay, we're going to try that, and then it goes to Africa from there. And so there's sort of this migration map of where you see innovation around the world, how it's developed, the bottling, the labeling, everything about it. And a lot of that really starts in Asia. And then the trends are picked up in North America. You have growth in online and specialty retail channels. I think that's going to continue. And then you have this potential for cannibalization against traditional coffee for some of these drinks that maybe have more coffee flavor but less coffee in it. So is a coffee chain going to use for a mochaccino? Are they going to use a single shot of espresso, double shot? Or are they just going to use a teaspoon of instant coffee? Or are they going to use some extract flavoring? So it depends on the product offerings, and obviously cost is a big consideration on that. Let's talk about Trump tariffs. Green coffee typically enters the US tariff-free. However, under the Trump tariffs, coffee is not exempt, and clearly the industry is fighting very hard for this. There's a 90-day pause on reciprocal tariffs, and hopefully by then, not only will the countries such as Indonesia and Vietnam that had extraordinarily high tariffs placed on them, that they'll negotiate and they'll disappear as the hope, but also that the industry can fight it, because clearly we don't grow coffee in the US, and therefore it's not hurting anybody. It's only going to hurt American consumers. So I think hopefully that will go away. The knockdown effect, obviously, though, is that tariffs in general are going to squeeze American consumers, and that leaves less dollars, where consumers are going to be more mindful about their spending. One of the possible risk is that the U.S. will take away the tariffs on green coffee, but leave it on for processed coffee, and then obviously all the packaging materials, and therefore that could impact the industry as well. There's also this protectionist shift that could affect machinery and inputs. I did a quick glance on the internet, and I was trying to go through all the companies that manufacture coffee makers to see how many coffee makers are actually made in the United States. Well, they're assembled in the United States, but for most of them, including the rawhide on like the Chemex glass vessels, that's important from China. So many parts. So if you have a coffee maker, home appliance, or you have a retail shop, you have to be very mindful about what are the parts that are potentially break the most frequently, and do you have sufficient supply on hand? It's not going to be as easy if there's a trade war with China and the cost for some of these parts triples, that you're going to be able to fix your machine as quickly as you were before. So we have to look at trade risks here. Who are you relying on, not only for your coffee, but then also for your equipment, and as I said, the parts on your existing machinery. So you need to diversify. There's going to be relocation of roasting facilities and operations to circumvent tariffs if they're going to stick. And all that does take time, but the industry is certainly considering all these options right now. Turning attention to the grower side, productivity and sustainability, there's a lot of work being done with regenerative agriculture. Not enough, in my opinion. It just all takes time. Looking at rejuvenation, pruning, grafting, high density planting to boost yields, use of mobility, mobile phones, agri-tech tools for fertilizing, scheduling, pest detection, and weather monitoring. All these are really critical, and so is diversification of crops to stabilize income. And certainly this is something the industry has focused on for many years, but really needs to make a tremendous push to help especially small farmers. The other thing is labor shortages. This has been talked about at many conferences for years, and Honduras, the migration for workers north into the United States has taken away a lot of the labor and aging the population. Brazil has mechanized harvesting on most of their farms, not all, but Brazil can do that because a lot of their lands is flatter, and the plots of land are much larger per number of hectares per farmer than other countries that have land on steep slopes. So robotic harvesting is going to have to be the trend, using AI to carefully select cherries when they're ripe, and reducing waste, less on the ground, and reducing labor. And that would help Central American producers, African producers, be on more of a level playing field with some of the cost efficiencies that a country like Brazil has. Brazil's also putting mechanized harvesting now more frequently, even in the Robusta areas, not just in Arabica. So we need to find ways for smallholders to be in the game, because their costs are prohibitively more than some of the large farmers. And in periods of high prices, that puts them an even more distinct advantage, because the consumers aren't going to be able to afford it. Labor market shifts, I mentioned many of these already. We need to have training programs to upskill workers in technical roles and maintenance roles as one possibility. We need additional mechanization to reduce the reliance on manual labor in flat regions, and the problem of aging labor continues to be an issue. But there are ways to overcome it, just the industry needs to work hard at doing so, because that could threaten longer-term supply. Then we have our environmental challenges as we wrap up here. We need carbon smart practices, the agroforestry, organic composting, reduced water usage. So those are the big three. We have certification programs that demand traceability and ethical labor standards. The problem is the certification programs are very costly for producers, and consumers expect it from manufacturers and on the coffee that they're buying and don't necessarily want to pay for it. And so that becomes a problem. I mentioned regenerative agriculture, so making the soil sustainable. In Vietnam, there's a switch from coffee area to durian, and that was because durian prices were much higher. Vietnamese farmers are finding that durian actually utilizes a lot more water than coffee. And with coffee prices high and there's been drought in Vietnam, farmers are turning away from durian. However, there's actually some studies that were done that durian helps to regenerate the health of the soil. And so they need to find that sweet spot in how much of a farm will have durian versus coffee. So some of the intercropping, actually studies on it has provided interesting findings, and it's just not about the dollars and cents, but how intercropping can actually help to maintain natural soil health. Finally, the last topic is EUDR, the deforestation regulation, how that's going to impact the supply chain. And based on the certified stocks in New York, there's about 800,000 bags in certified stock. The exchange every day releases a report and shows how much of that is actually not in compliance yet with EUDR. 700,000 of the 800,000 bags in stock are not yet in compliance with EUDR regulations set to go into effect end of the year. There's a lot of work that still needs to be done. I think the industry is hoping that it goes away, gets delayed again. Recently, earlier this month, the EU did say they're going to relax some of the standards for the reporting requirements to make it a little bit easier, but there's so much more work that needs to be done. And I'm afraid that, in the industry's concern of smallholders being excluded because they don't have the resources, lacking the resources to comply, and therefore there's going to be shifts in the type of coffee purchased, and that's going to be a detriment to some of the smaller countries where it's difficult for them to meet the compliance standards. So the EU market impacts, reduced eligible supply pushes prices higher in the short term. You have a consolidation among compliant suppliers, need incentives for traceable certified origins, and then you need to have potential realignment of sourcing to meet these EUDR standards, and therefore the larger countries will have an advantage of some of the smaller ones. And finally, as I wrap up here, looking at my conclusions and strategic implications, I think, clearly this market's at crossroads from an environmental perspective, financial perspective, and consumer forces. They're all intersecting right here and now and presenting more challenges than I've ever seen in my 42 years covering this market. There needs to be continued emphasis on adaptability, that flexibility, traceability, and innovation to sustain competitiveness. And stakeholders must continue to invest in resilience, whether it's fiscal, financial, and regulatory compliance. And with that, thank you so much for your attention.
Thank you very much, Judy. That was excellent. Very well done. I'd like to ask our next speaker, Matt Couch, to yield 5 minutes. We'll credit back the 5 minutes at the end of his session. But we do have some interesting questions that we can go through pretty quickly, I hope. First question is, what is the ability to store coffee in terms of perishability and in terms of exposure to the elements when coffee is stored?
Okay, great question. Coffee is not like wine and it doesn't improve with age. You've got a situation where coffee is highly perishable. Freshness matters once it's roasted, especially, but we're really talking for the most part here about green coffee. The exchange actually penalizes coffee for sitting too long in certified stock. So after 4 months, the meter starts running and in accelerated form, because you can have a situation where the coffee fades in color, it loses weight, and also some of the flavor components. So coffee is perishable. That's why you want to get it from point A to point B as quickly as possible. That being said, there's a lot of coffee that is aged, past crop coffees that do sell and always finds a home for someone looking to blend it in, take advantage of a discounted price. And some
Okay.
consumers don't even notice the difference. Not everyone has that fine palate to discern it. Roasting equipment and technology is also working in favor of taking some coffee that might have been questionable and incorporating it and masking those flavors.
Okay. The next question is, how important is Starbucks to the price of coffee? So if you're a coffee analyst, if you're following the commodity, how important is it that you also follow what's happening at Starbucks? Or is it not?
Actually, I wouldn't say that I follow Starbucks per se, but I mean, obviously I do. But in terms of general trends, what's the innovation? What are some of the factors that are some of the smaller shops, non-chains? What are they doing to drive customers maybe even away from Starbucks and other chains? Look at Luckin Coffee in China. There's so many different ways of focus. Starbucks has their model. It's worked great for them to a point. They moved away from that model, are trying to come back to it, where they were so focused on driving customers through the stores rather than having that experience. And they're trying to bring that back. So they took a slip there, and it's well known and publicized. They recognize it. So that's something for other smaller chains to monitor and look at. But I think you have to look at the beverage menu itself and the product offering.
Mhm.
Every single store wants to maximize revenue per square foot, square meter, whichever way you're going to measure it. And they're going to have a lot of products in that store to drive consumers to buy as much as they can, increase the value of their ticket. So it's not just about the coffee. It's about a menu board option and also having that food component.
Right. So I guess
Washing and clean bathrooms too.
yeah, right. Part of the premise behind the question was, the analogy is avocados and Chipotle. Chipotle is a very big customer of
Mhm.
avocados, and just wanted to see if there's an analogy of Starbucks being maybe 10% of the market, or maybe it's just not that significant in the whole scheme of
So
things.
the way I would say it is that the Starbucks name and their innovation has put them oversized relative to the total global market.
Okay.
So in
And
terms of the importance, I would say that need to remember that at-home consumption is still a greater percentage of all coffee sold worldwide. Instant
okay.
coffee, so let's break it down. Instant coffee is growing at a faster rate than traditional coffee beverages. Liquid coffee and some of these mixes, convenience, gives opportunities for others and technology to compete against some of the major chains.
Okay. And then you mentioned this, but when so much of the population is taking Ozempic like medicines, what impact does that have on coffee? Is coffee congruent, incongruent, or neutral relative to these diabetes drugs that so many people are taking?
Depends on how you're having your coffee. If you're having it with a lot of milk and sugar, then it's not congruent. So black coffee, yes, but I think caffeine is also emphasized as something that you want to try and stay away from. And therefore, decaffeinated coffee, some people will say, well, I don't want it. So there is potential for it to be an industry disruptor.
Okay. And then last question, just within a minute or so, to what extent is coffee seeing demand from other food products? Like you see coffee flavor, at least frozen yogurt and cakes and things like that. Is that becoming more important or less important to coffee demand?
So if people are loving coffee because they're experiencing it in ice cream or in other desserts, then maybe they'll want to drink more coffee. So the more exposure you have to coffee flavored candies and everything else, then the more likelihood that you're going to be converted to a coffee drinker.
But
The
there's no coffee beans that are used to derive those flavors in
Well,
desserts.
it depends on the brand of the ice cream or the cake. Sometimes they'll use a lot of it is instant coffee, so the crystals rather than brewing coffee and adding it in. So it's very situational. It's not changing total global use. It's not moving the needle on that.
Okay. Okay.
Alternative uses would be, what are you doing with coffee husks and pulp and for the environment, using it for disposable dishware and packaging. There's so much more that can be done from that side of it, from an environmental standpoint.
Okay, great. Well, this was a fascinating topic. We all learned a lot about coffee. So, Judith Ganes, thank you so much for speaking to us and delivering an excellent presentation. It was very well organized and very thorough, and we very much appreciate it.